Good evening. Welcome to the live Facebook. And tonight we'll be talking about generally what's happening to the market. And thank you for coming. For those of you, I hope that you already, for a Muslim friend, you have already opened your fast and already can have your meal and think you're all settled down. And now, of course, I thank you for your time to be able to come tonight. And for those of you who are not fasting, maybe just finish your dinner. So let's talk about something which has always been in my mind, the kind of strategy that you want to be doing, especially in this bearish outlook, the kind of bearish market outlook. But I did talk about last Wednesday, a bit of continuation from last Wednesday, our live Facebook, is that we're going to be talking about where should we go from here. So I'm going to give you a bit of snippet, where are we likely to go. So for tonight, our live Facebook again will be strategy for investing and trading in this bearish market outlook, pretty much taking off from the series that we did last Wednesday, a live Facebook, and how to identify very shortly some of the opportunity using VSA. And you all know that I myself here, Martin here, has been one of the users of volume spread analysis through our trade VSA analytics, and a little bit of upside potential in here to roughly tell you how much ahead the market's going to give you, and I'm going to give you a heads up how well and likelihood where the market will be going in here. So thank you for coming tonight. So for tonight's sharing agenda session, we're going to be talking about what's happening in the current economic climate, and the things that you may heard before. If you've not heard it before, let me drill it down to you. And very important is point number 2, how to be in your best, the top of your game. Okay, so the top of your game is this point. Oh, let me just go back here. Is this, what's happening to my mouse here? All right, is to be on top of your game. Okay, so when we talk about on top of your game, yes, this is where I've talked about on top of your game. My apologies again, on the wrong slide here. Is to be on top of your game. What are things that you should be doing? A little bit of, if you can just follow 30% what I've suggested in here, I think you pretty much have, even with the likelihood of the bearish outlook, you will pretty much have the control in your hand. And also point number 3, the strategy. What kind of strategy you want to be doing, and you have not, maybe you want to adopt some of this strategy and the future market outlook in the coming weeks. And also we're going to be looking at where are the opportunity are. Some of these opportunities are available on the Smart Robie apps, but the reason why I want to talk about in here is to give you something that we talked previously that you may have not overlooked it, and see how we talk about previously what has happened those shares and where will we be looking at, and then we will do a closing and a summary. So that's pretty much I want to talk about it tonight. So let's sit back and relax. Now, of course, the past months or so, even starting back from February, many of you have been hitting a lot of news headline, right? A lot of bad news headline. And you'll be asking, are we going to get more news headline in the coming months, Martin? Well, the crystal ball that we all wanted, nobody has it, including me, but I can only tell you from the clues that we have the kind of trend that we see before. And if you stay on right to the end there, then much of it will be reviewed in here. But as much as it is, these are something that we as trader or investor, or even as market watcher, already attuned to it. Market tumbles, a banking crisis loom. We have seen the VSB, we have seen the Signature Bank, we have seen the Credit Suisse, then we have seen Deutsche Bank. All these banks are coming out at the same time, and all of a sudden now they started to fade away, as maybe the newspaper or the media has got tired of it and no longer talking about it, right? So right then everybody said, hey, with the uncertainty going ahead, nobody knows what's going to be happening next week. And then investor flock to the gold, right? That's why we've seen gold yesterday finally hitting $2,000 in here. Now we all still remember previously in the past, almost 10 years ago, I always said gold very seldom hit beyond $2,000. Who knows? Inflation is definitely one of the key factors making gold as a safe haven during this economic uncertainty. And of course, central banks still need to deal with the high inflation, as even one of the Fed chairperson of Atlanta continued to say high inflation at 5% will stay on pretty much of 2023. And she thinks that there is unlikely will be any interest rate cut, but who knows, right? Just like nobody know 1 month or 2 months ago we would have the banking crisis. So lots of uncertainty in the market, and for those of you who are watching tonight will probably think what is likely to happen and where should it. And I definitely I would think that some of you are not in the market, or because you don't understand the market, or you don't have the tools in here. Certainly you want to stay out, or you already been burned before. I want to do it tonight is to clear some of those misconceptions and clarifications so you can really start back and to avoid this crash that we've seen pretty much last year when interest rate, because that interest rate that has dropped significantly last year, that scares the hell out of people, and definitely we don't want to be having another crash, because if you turn on your phone and you'll be seeing a lot of these headlines and it's saying another 50% drop, another market recession in here. But always I believe the more of you hear it, the more people talk about it, the unlikely it's going to be coming in here, right? So that's why we always want to look at the odds in here. Now, how would you react as a trader, as an investor in here, right? Something that the takeaway from last Wednesday, you'll remember. What do we see when we have all these events? Anybody can tell me? Just pencil those in there. If anyone can tell me in here, what do we how do we react as an investor and trader when we see things like that? Do we just back off and withdraw all our money like we've seen what's happening in US with the SVB collapse? Many people are afraid their money will be gone, and they took all the bed and put it under the bed. How would you see the scenario in here, right? Now again, depending on your education level and also the kind of risk tolerance in here, we will see things very differently. All right, very important. Let me just bring this up again. Right, is the fact that I've said last Wednesday is whether you see this as a waging, all right, waging, danger and opportunity. I know I'm keep flashing out because this is a very, very important point that I want to keep highlighting, that you see a glass of being half empty or half full. That's how we read. So as an investor, as a fund manager, and I was trained in here, I'm just like you too. I always see danger, I always see fear in here, but like it or not, I want to be trained, and I had the opportunity to be trained as a fund manager over time in here, and then able to see the opportunity that I'm not able to see. So that's why we have to move away from the danger to the opportunity. If you have danger, then you won't even be paying any attention or even precisely looking at the fact that I'm talking in here. But it's very important that from the sound way to understand the facts, to understand the matter, so we are able to see opportunity like this guy, able to look beyond that. And that's why I want to do this purpose in here, to explain to you all what you can do as an investor in here. Now, 5 things you should do as a rational investor or trader. Definitely this is one of the scope, is to do your own research. And this is why we always talk about being on top of your game. Now, many of our member, our Trade VSA member, our premium membership, they have the VSA 360, and a lot of the time we tell the members you need to do your research, and what better way. And even if you don't have the VSA 360, you can have the Trading View or even the Smart Robie apps can partly do some of this research, at least to know fundamentally the Smart Robie rating, is it good or not in here. And of course, very important is to have our emotion control. Time and time again, I keep saying that if you don't have your emotion in control, then a lot of the time we get into trouble and not able to see or get carried away when we panic and so forth, right? And not to forget, even in the midst of it in here, is the risk management. Now, every time when you step into the market, you stand a chance to even lose some money. Then the question will be, how much am I going to lose? How much going to win? So the risk and reward come into play, of course, right? You all know about this one in here. So that is what we talk about, the risk and reward. So the other thing we want to talk about is the is the next point I have here, is have a long-term view. Now, the long-term view is very important. Many times we are never trained, especially in the area of TikTok, right? We used to be so good in watching a 30-minute documentary, a 30-minute video, and we got shorter and shorter in there. Even last week when I was at the PJ startup, the festival startup, was attending one of the talk that was done by another guru. He said that the attention span of everybody has got shorter and shorter into seconds. So that's why a lot of people find it very, very difficult, especially in the context of investing, to have a long-term view. And in many ways, it's set to, contradict a lot of the basic, principle that the person have, that they have this such short attention in here. Having a long view, especially Martin, you're talking about 9 months, that's beyond me. But remember, we will live very long, don't be YOLO, right? A lot of people say you only live once, and that's what a lot of people take unnecessary risks and get into trouble. Right? And then finally, right, on top of it here is there's a lot of influencer today, as I said before, TikTok, Facebook, Instagram, right? You can follow whoever the influencer may be, a trader influencer, but always question the motive. Even me right now in here, I may be a VSA influencer because I always talk about volume spread analysis. I talk a bit of a fundamental in here, but that's why we have a section in here for you to question me. And then also look back at some of the videos that I've done. Did I get it right? Of course, I don't get it right, but I've tried to explain the facts that is presented to you in here, so you'll be convinced of how I arrive any conclusion to the matter. So these are the 5 things I think you should do as a rational investor, as a trader in here. Question everything, keep a long-term view, and so forth. So let's talk about the first thing, which I've just talked about here. Now, when you want to do your own research, it's important that you subscribe to good services in there, so you're able to do it. Many times again, we take things for granted. We ask our friend, hey, what's share good to buy, when your friend buy it or not? Or the other more common question that I do get is, can buy, right? So is that considered conducting the research? Remember, every time when you ask someone next to you, or a friend, or even at the coffee shop, their perspective may be different, right? Because every one of us are different, right? We talk about the time span that people might want to watch TikTok, some like to watch YouTube, so forth. Everyone is different, so it's important that you do your own research to get to know a bit of yourself, especially if you are just starting up nicely. Now, another thing that many people do is that they don't listen to, or at least try to understand, some economic terms in here. Now, you do know that many of my live Facebook talk every night, I always integrate or conjunct with a bit of economics term, inflation rate, and you're going to look at the interest rate movement. We're going to look at the GDP data. So those are important too. And then from then onwards, you link them back to the VSA trend. Now take note, the VSA trend is actually based on price and volume, and many times, many of these are so-called, what we call confluence. They are not directly linked, because price and volume will move in a certain way before the economic. So that actually leads me to another point. Which one is a leading indicator? The market trends that you see in the stock market, or the economic trend, right? Which one do you see is the leading indicator? Now give me your answer there. I hope I get your answer in here. What is the leading indicator? Is it the market trend or the economics that you see now, which is like the recession in here? All right. If not, I'm going to give you the answer at the end of this session, so stay back, right? And then also another one, you want to consult reputable sources for insight. Can I trust this? So that's a lot of time where many of the audience in here, they don't have someone that they can turn to and ask questions. And a lot of time in my breakfast show and in here, I always ask questions. I'm always available. You can always pencil me, always WhatsApp me. What do I think of this one? I'm more than happy, especially myself and the coaches in here, to be that resource to you, for you to build and learn about the market. I think that's always, we, myself, Zach, and a lot of our coaches are available. And through our Trade VSA premium membership in here, where you get to use the VSA 360 and the coaching. And also, remember, our members, next Tuesday will be our second meeting of our orientation monthly meeting, where we conduct on the second Tuesday, where we give a set of work for them to do. There's some feedback. They have to do some trade exercises, and then they come back to us. And this is where we will look at the things that they did correct, things they didn't do correct, and we are able to so-called correct them, so to ensure that they don't make the mistakes when we are doing with the real money. Do what I say this makes sense? Right? And that's why the purpose of our Trade VSA Premium membership, to allow that they will make informed decision and reduce emotional biases in here. All right. Second, oh goodness, what is happening in here? All my slide is all running in here. Okay. I think I hit the quick buttons here. So the next one, right, I'll be talking about is the don't be overly emotional. I apologize for that one. Apparently there's always some technical problem in here, so I'm just going to use my mouse rather than my pointer. All right, now another one will be don't overly emotion. We all many times, especially I talk to people during the COVID, right, the emotional part of it. This is especially when the rubber glove, remember the rubber glove, where the rubber glove start moving from 3 ringgit up to 19 ringgit. A lot of people got into the overhype and not able to cut loss when they need to. The question was really a lot of them got into the market, but they were never prepared, right? Just like the Russian and the Ukraine war. Would you ever fight in a war not being prepared? Right? Definitely we can see from the Russians, they are not well trained, and that's why they are suffering right now. Whereas the Ukraine, a much smaller nation, even one of the number 14 or number 15 largest nation in terms of army and weapons, right? They could not, they are far beyond the Russians, but yet they are able to beat them in the manner because they are more well prepared. All right. So by being prepared, you're likely to avoid a lot of what we call impulsive decision, especially when the market move up and down very much. And also remember the headline that you usually see, right, coming up, bear newses, recession again, 50% drop. So all these are scaring a lot of the people in here. And another one is your portfolio. Do you ever look back on the stocks that you buy, right, on the quarterly basis, especially when we talk about the slightly longer term view? Now, right now in our Trade VSA, in our masterclass portfolio, we do a monthly rebalancing, and this coming Tuesday, for those of you who in our Trade VSA premium membership or our members, we will be doing the portfolio rebalancing and looking some of the stocks that we took off, some of the stocks that didn't do so well. We will rebalance, means we will cut loss and we add new one, and that's what we talk about, rebalancing, making adjustment if it's necessary, right? So those of you who want to be slightly trading in the medium to longer term, so that's how you want to able to control each step and preparing, just like having a plan here. All right. Then next is to manage risk, right? Time and time again, risk is so important. If you do not know, the risk level in here, very likely then you get into trouble. First thing first, you need to set realistic expectation in here. Now, sometimes a lot of people get a lot of what we call emails and also advertisement that you see on YouTube that pops up and say that if you take my stock news, you can make one made from what $100,000 to 9.9 million in 3 years. You hear those before, right? So a lot of these people set the kind of unrealistic expectation. Yes, there will be maybe some opportunity, but what is the chance of it in here? 1 in a million, right? So we always talk about the probability, the normal distribution curve. So you need to set realistic, because the truth is many times a lot of this really not going to give you the kind of return that you see in here. So set realistic expectation, and then again do your own research, and of course backing up a lot of these so-called literature that you see, right? This person will giving testimonial and so on and so forth. Is this people for real? You need to reach out to them and find out what is this possible or not. So that way you will know that many things you see out there are far from the truth in here. And of course, to set up the risk level in here is also important. That's what in all our charts we have the ATR stop loss, which is the horizontal red stop line there. And if you have it on the smart Robie, which is a live data, and that's where you want to hit and cut your stop loss. We have tutorials for all those in here. All you got to do is just ask that question in here. All right. Now give me a thumbs up if you're doing a good job in here so far here. Now having this in mind, managing the risk will help to protect your portfolio. And again, more important is, why we are doing all this. Even tonight with this information that you're getting, you will be make a very informed decision, right? A very informed decision is very, very important in here. So going forward, now the top 3 strategy that we recommend right now in here, right, is diversification. Now that's why now you cannot be just buying all one type of stock depending the kind of strategy is, but I always say before, always diversify out to other asset classes. Now we talk about gold in here, which is I will always talk about in my previous live Facebook in here. Gold is something that you want to have if you have a much larger, bigger portfolio that you're going to have it. Gold is not the one that's going to make you that 1000% return, but it's a way to sort of weather the portfolio that we've been seeing so far in here. All right, so another one is to focus on quality, quality beaten down stocks. Right now, as you can say before, with this bearish outlook, a lot of stocks have been beaten down. I think last week we talked about the banking sectors in here, right? The banking sector may work out, and also the local KLSE technology, right? The technology, we're going to be reviewing some of those stocks in here because those were the opportunity previously, and we want to see whether the market will have a continuation from here or not. Right, beaten down. And then finally, all right, learn to love bad news, right? So the news that you get every day, no doubt it sort of zap away the kind of happiness that you may have for the day, but learn to cherish, learn the bad news in here, because this is part and parcel of contrarian trading and investing. You see the picture on the left, the red guy over here, right? This is the guy who will definitely swim against the river stream or the current, the river current, right? So this is something that sometimes we find it very difficult to do, right? Because we always want to be popular, we want to follow right trends, especially right now in the flow of social media. We always wanted the attention, right? Now you don't want to be sticking out like a sore thumb and be a contrarian. So sometimes these things that you do day to day in your social media, but when it comes to trading, investing, contrarian trading, contrarian investing, loving that bad news is actually one of the strategy you should adopt too. All right, now here for one thing for sure, we talk about in here, diversify out, invest in gold, right? I'm going to show you a couple of charts on gold here. Focus on the quality beaten down technology stock. You can use the weekly green pentagon for that one. We always say that will be the much better way. And of course, the contrarian trading in here is the rubber glove. All right, rubber glove previously we talked about in my breakfast show when it started to turn green pentagon on the hot sectors. That was where we were talking about it in here. Right now, the rubber glove, I will give you an update in a couple of minutes, just down my slide in here. But these are the area. Look for quality beaten down stock. Right now, it could be technology. Couple of weeks from later onward, it will be something else, right? Definitely the banking sector is also beaten down in here, but it's not going to give you the 1000% return that you expect in here, depending on your risk profile, what you like in here. But stick around. What are the 2 key points? Beaten down quality stocks and contrarian trading or contrarian investing in here. Now, contrarian investing, I think many of you would know, but let me just sort of give you the general statement out here, where you take an opposite view to the market trend, right? So right now, market's coming down. Everyone, even tonight's the topic is bearish market outlook. So if it's a bearish, you have to be bullish, right? Of course, no surprises to you. A key point that I talked about last Wednesday is from Warren Buffett. He always say, when others are fearful, you will be greedy, right? And this is really part and parcel of contrarian trading, right? So here you want to be taking a look at undervalue, beaten down as asset in here. One way you can use the smart Robie, or you can use a VA6 360 in here, or any idea that pops into you when you're reading the media or the newspaper, even your friends that show you. Always look at the chart, whether it's green pentagon or red pentagon, and that's you go from here. So the goal here is actually try to buy low. I mean that's the whole point, managing the risk, where you will lead to at least making an informed decision and taking advantage of the market efficiency in here. Because when especially right now, there's so many bad news, but market's not going down, right? So this is where we talk about market inefficiency, because there is a time delay of 9 months, 6 to 9 months between the stock market versus the economic indicator. That's right. Now that's the answer I'm giving to you in here. Now earlier I've talked about this here because the market always move ahead of the economic indicator. So by the time they talk about all this recession in here, bye-bye, the market's already run. So that's a piece of behavior, right? Just on top of me here, let me just bend down, that we need to put back into our brain in here. Remember, the stock market always move ahead faster, right? You all remember even the rubber glove, right? It hit at the top there. A lot of analysts some analysts are saying buy, some analysts are saying sell, right? But you should just keep in mind, when everyone is greedy, right? That's a time you want to be fearful and take your money and run. That's being a contrarian view, assuming you buy low and you want to sell high. So those are what we call behavior biases, because many times we want to stick to the group think, right? We want to think along the same line in here. I also fall into that. So sometimes I try to correct myself or remind myself by looking at the charts. No one tell you, right? Remember, charts don't lie, people lie, all right? So here it's a chart that we can look at. The gold can play as a safe haven in here. Of course, on hindsight, the market already gone up. But if you've been a gold follower like me in here, there was a green pentagon in here. A good entry is where the market stages turn above zero, or green pentagon in here. You would have probably got in just around 1900 and broke through 220. Right now you got upthrust and upthrust, so means weakness is setting back in here. But we all know gold is actually a flight to the safety in here. I bought gold just around 1006, 1007. I've been holding it for some time in here, and it's something that I use to hedge against inflation and currency devaluation, especially our Malaysian ringgit in here. When I started to buy, it was around 3.6, 3.8. Now it's 4.4, and sooner, even not further on, if you go on, I do think that the ringgit will depreciate against the US dollar. That's how I see in here. So it's definitely a way to protect wealth, okay? Something that you need to buy, but you do need to buy all of them. And for those of you who have cryptocurrency, that's another day, another time in here. I will talk about cryptocurrency in here. Now, of course, let's talk about interest rate in the coming months in here. Interest rate forecast is such a very delicate research or inform. I'm trying to give you my best forecast in here. All I see here is the US 20 government yield, which you can get it on TradingView. Just type 20 USD, 20 Treasury USD bond yield. All right, then you'll get this chart that you see in here absolutely for free in here. So what you can see right now at this point, interest rate is about 4.2%. It's coming down. You can see it's coming down, right? So the expectation from the market is that the rates is likely to move lower. Of course, if it does break 3.7, 3.6, that means rate will be stopped. And when they cut interest rate, you can see this even fall further, right? Because this is an expectation of the lower inflation range here. Now, of course, do take note, once they start to announce this point here, announce the mild recession, or you call it the shallow recession in here. It's not going to be a hard one in here. So when mild recession, that thing comes out, everybody recognize it, right? And remember, I've talked about in here, economic indicator like mild recession announcement will always be late. Means the market is started to pick up and run at it. So that's why we are seeing, market about to go higher. But in the midst of all this fearful uncertainty, a lot of people still don't get it in here. Now remember, once mild recession is set in, where the US Federal Reserve registered and ignore it, they have no choice but to cut interest rate, right? It's a recession. How can they raise interest rate? You think of it, right? Recession, the last recession we had in a very fast one was the COVID-19, and in the beginning of March 2020, we have that big fall, right? It was a very quick 3-month recession. What did they do? They cut interest rate, and see what happened to the market, right? We saw the rubber glove went up, we saw the technology went up, and that's what likely we may see. I'm not saying that that's going to be happening, but that is likely the scenario that we will be planning out. So how do you take advantages of this? Definitely those of you who are looking in can buy into the ETF bond, the TLT, which I got it for myself too, because in the expectation, right, that the interest rate is going to be coming down, and we all know, right, bond prices is inverse to the bond yield. So whenever interest rate comes down, bond prices go up. So TLT, which is a 20-year plus treasury bonds, is likely to go up. It's a slow moving stock in here. It have come off from a very high figure in here. Now remember, The base is about $100 in here. Now this stock is not that volatile, but if the direction is correct, where interest rate is likely to be paused or cut interest rate, you will see the 20-year treasury bonds going higher in here. All right, so that's one direction in here. Now we did talk about the technology sector. Now let's go over to the technology sector, which is a continuation from last Wednesday, our live Facebook in here. Now the known first quarter technology outlook, we all know, right? The first quarter, the market did try to break, but it stood on the 200-day moving average. That is a very, very strong support. Now, if that market broke through that 200 moving average, we won't see the bear market, we won't see the bull market that we are seeing. So this 200-day moving average is important. Now, we can also see that we have spring, we have spring, we have spring. Right, these are signs of strength. Now, spring, every time when you have signs of strength in here, that provide the support. It's just like, you know, this is your floor, right? This is your floor, and if you throw a tennis ball, it'll bounce off, right? Tennis ball bounce off, right? And that's what's happening in here. So this market is going to be bouncing off, and that's why it's straight up taken out the old high at 13K for the Nasdaq. So this market is breaking up. So the question is right now, you know, people are saying, hey, you know, it has turned bullish. Where is it leading to? So this is, nobody know about what's going to be happening now, because on the US, the attention now is turned into the indictment of President Trump, where many of you would have seen it on TV or on CNN. So that attention is turned into that, not until we get a little bit more bearings, maybe next week, how the interest rate pan out. But my best guess is to look at the 20-year bond yield and the TLT. That is likely to show you the direction of the interest rate, right? So right now we can see market been going up 4 or 5 bars in a row, and we all know after 4 or 5 bars, generally the market usually pull back, and that's what we are seeing right tonight in here. Let's see what's going to be happening tonight in here. Now remember, why is the tech index Nasdaq rising? Now Nasdaq will tend to rise on a wall of worry. Remember, it's a wall of worry, because when market is fearful, this is where the market started to run. We are still having a very bearish market outlook in here. So some people are saying that this is overdone, this is a dead cat rally. But remember, when market is rising on bad news, or maybe absence of a really good news, no news at all, really still bad news. Now remember, I spoke about the US Fed Atlanta chairperson Miss Meister said that likely the 5% interest rate is going to be staying up there and no interest rate cut. But guess what? The stocks that I've shown you, the 20-year bond yield, the TLT ETF, are heading higher, and that's what the Nasdaq is. I do think that you can see a lot of strength in here. This pullback is natural. It has to form some sort of support, but very importantly, you can see the railway track already open up. So once the railway track open up, then it's a good sign here. So the market index rise faster than the economy. Remember, it's a leading indicator compared to what we've seen. So Pentagon guided, those of you who are very familiar, it is a leading indicator. Now what we want to do here, I also added something very easy for our members and also for the public, is to count the number of bars. All right, so right now we can see, right, traditionally the last green pentagon that we have, the blue trend zone in here, right, we have 18 bars. Now this is definitely one of the features. You'll get it from TradingView. Just look up at the info line on the left hand side and just drag and drop it. You will see we have 18 bars. Okay, 18 bars or 27 days. 18 bars is like 18 trading days lah. 18 trade about 1 month or 27 days here, right? And right now we have 20 days already green pentagon, 14 bars. So that's why I said if it follow a sort of a sideways market, or the kind of building, not the kind of medium bull market that we see. I don't see a medium bull market yet, right now, but who knows, things might just change, right? But the way I see that likelihood, the technology may turn red pentagon on top of some news, which is maybe a good thing. It'll turn a red pentagon and then turn back to green pentagon in a week or so, but that doesn't dismiss that the trend is just up. It's just a pullback in here, just that we have to be very cautious. The market will try to wash the so-called the buyer. Remember, but the bull market doesn't like buyer. You know, you will try to wash all you out in here. So sometimes it's also good to pay attention to the economic indicator that we see on the bond yield together with the chart to see that we can ride this bull or not. But definitely right now, from the shorter term, what I do see, red pentagon will turn in about a week or so in here because it's a leading indicator. I may be wrong, but so far that's how I want to play onto the safe side, because if you look back in year 2022, the green pentagon era, right, the last one we had on was July 2020, where the bottom, where the hike of the interest rate, which was the highest, was bottomed up in July, and then we saw the market rally. And it's something like this, what we are seeing right now. You can see it actually gone up by 31 days, all right, and then the current one is 15. Then the last one we had was January, is only 15 days. So if it's 15 days for the last period that we have when the market was green pentagon or blue trend zone that you see here, so likelihood the market will turn next week, or if the market is bullish, what we see, we might have something like this: red pentagon, a wash, and then immediately turn up. That could be also the scenario, because right now I'm just trying to play out the likely scenario in here. We might get a red pentagon and then turn back green and start to pop all the way up. So just want to prep you guys first. Even the bearish outlook that we see right now in here, because I don't think it's going to go up straight 31 bar long, because the market didn't break down that low, and I don't see any potential, you know, super bull news going out right now. So likelihood the red pentagon is likely to come out. So there are two scenarios that I'm planning out here. The first one, that the US tech in here being as a parameter in here will turn a red pentagon very soon, within a week, or maybe if the interest rate have some sort of evidence of a slowdown, then we'll get a longer rally, which means this rally that we see in here will likely to continue to first week of May. And then what happened to the first week of May? Usually when we get the first week of May, we'll get the sell in May and go away seasonality. So what does that mean? It means that this April month will be, you see, this was one of the best months that we've seen. March, 9% return, right, for Nasdaq. 10% return. This is some of the best return that we have in the last maybe 15 or 20 years for the quarter. Almost 19% return. So usually when you have a 90% return, next quarter usually will have some sort of a pullback. As you can see, one negative year, minus 35%, and you all know I talk about the negative year, right, will always precede by a positive year. So you can see average, about yearly return average about 14%, but you look back 24, 42, 33, 0.6. So I do think that we are likely to be on top of the 20% in here. So in between here, somewhere May, June, July, there will be some pullback. If that pullback is happening, that is the area to be buying, right at the support there. Will give you some sort of a hint in here. I'm going to give you some technical and clues how to be buying on that one. Now, I've talked about last week, Wednesday in here, where the banking stock is playing catch up right now to the technology stocks. So you can see last week we showed that the technology, the KLSE finance, and the technology stock XLK. And then this week you can see the market pull back up already. See, XLK is up 11%. Last week was 7%. So within a week, it went up 4%. Finance stock also covered back, minus 5%. KLSE was down minus 5% for some time in early January. You can see right now it recovered back. And technology, all right, previously last week was down minus almost 9%. Now recover 7%. So the recovery is coming. Why? Because the Bursa Malaysia technology that you see here will follow the US XLK. It's a relationship all together in here, right? And eventually, you know, the orange that you see and the pineapple, when you juice them together, they all taste the same. Very, very sweet also, right? So this just a matter of time that the market will play catch up in here. I hope you enjoy and really understand some of the points that I've talked about in here, and give me a thumbs up in here, because there are not many questions that I see a lot in here. Maybe you're just enjoying the talk that I've talked about in here. Of course, not to get away with the XLK is the breakdown of the ETF, Exchange Traded Fund. Many of you may have seen it before. Apple, Microsoft, Nvidia, these are your household product in here. Of course, you can also use the VSA 360 or the Smart Robie, the S&P 500, where you can check out some of these stocks and look into the fundamental of things in here. And also, let's turn our attention to the Nasdaq. You can see also XLK to the S&P 500. You can see the sector are still rising. Last week, the finance minus 13%, and this week is minus 12%. So there will be catching up very soon. The XLF is the finance, XLK 6%, you can see. So this is where I do feel that technology has some rooms. The question is, find a good location to muscle. Okay, find a good location to muscle. So if I get it right, who knows, next week when it turn red Pentagon, that's a good time that you want to start thinking to buy, because right now it's looking a bit bearish. The market will turn, I tell you that. Next week or this week will turn, and then you'll see the market turn back up to green Pentagon, which is what I'm saying, because the overall year, we're going to see a positive upside because of the mid of the crisis. So on that basis, many analysts out there, even going back to 1 month ago, have seen the government U-bond, which I've talked about, and tech stocks seem to be a haven from in here. Now let's look at some of the stocks I talked about last Wednesday and continue from where we are. Now last week it was in red Pentagon, low risk entry in here. It's Sharia compliant stocks in here with a Smart Robie rating of 2. You can see this week, yes, already turned green Pentagon, right? So just immediately after my talk, it turned green Pentagon. Maybe it heard what I said, or maybe I just got it right. So who knows what is it, right? But you be the best judge of it, whether the market actually did follow me or is just the green Pentagon was so-called a leading indicator. Now on the front end, you have a 2-bar reversal at that time at $3. That was last week too. Then lo and behold, it went up to 325, which is about a 7 or 8% move. This is again one of the big cap, 4.7 billion here, price earning of 38 times in here, and return on equity of 22%. The other stock is Vitrox, again already turned green Pentagon at 788, a much bigger market cap with a 7.4 billion, PE of 37 times, and pay a small dividend in here. And this week also breaking up higher. Again, you can see here, this is likely to hit that double top, and that's why we see the market usually pull back in here, because that is a resistance, and the market just don't simply break and run up, because we don't have that super bull run that we are seeing right now in here. I don't see it yet. Maybe give it a red Pentagon and then it will come back. Okay, that's how I look at it in here. Next is Uchitech. Now Uchitech is one of the better one with a Smart Robie of 6 here, so you can check it out also on Smart Robie. So make sure you get friends or relative to download Smart Robie. And you can see this one is a smaller market cap, 1.5 billion, PE of 11 times. So that makes it a really inexpensive, undervalued share. Pays a 6% dividend here. And lo and behold, finally it maybe hear me tonight broke up to 330, and tomorrow you'll see an upthrust. So sometimes green Pentagon in here again, you can see the 200-day moving average here, which is the thick bold red line. That is the support, like the tennis ball just bounced off from the floor, and that's what's happening here. That shows you it is a very big support in here. Now when it comes to rubber glove opportunity, definitely there is some in here. So what I want to share with you in here is the feature, and I do hope that those of you who have opportunity to use the okay, let me just log back in again here on 360. Okay, VSA 360 in here. Alright, and you're able to see what I've talked about. So we go back to the market, and we go to the screener. Just want to show you this. Those of you who have the VSA 360, you're able to have the chart projected out nicely, very well in here. So we just need to switch to the healthcare. Right, click submit right now, and that will be the latest chart that is out there. And you can see from here onwards, you have this chart here, and let me just scroll it down before. And what I want to share with you, you can see the chart comes out, so you can just see side by side, so much easier here in here. You can see, right, side by side, And you can see in here, these are the same chart that you're seeing. So on the time when you're scrolling, you can see whether these charts are worthwhile to buy. Now, one of the features about the VSA 360 making it much easier, especially if those of you know which sector is strong or weak by looking back into the industrial sector there, right? If you're holding industrial sector, you pick it up, and then you want to be looking into the top market cap stocks in here. They're able to put your best price. You can see here the last 6 months only gone up by 36%. 1 month is up by 28%, and for the last 3 months it's gone up by 9.9%. So some of the big move actually comes from the green pentagon in here. All right, from the green pentagon. So that's the short demo, just a quick filter I want to share with you in here. So you can look from these 3 stocks: Top Glove, Hatalega, and Kosan, right? You have 13 bars, okay? So 13 bars, 19 days, This was where it went up, right? In that very short, from the opening of the green bar, gone up by 18.65% in here. This was a much better one, a lot before that big move, right? You can see here, move sideways, up almost 25% in here from the green pentagon. And not to forget, Kosan is up from the green pentagon, okay? Here, to yesterday is 155 in here, but right now the Top Glove is looking a bit very topish, so I will be generally want to be a bit more careful right now, rather than just go all into the market, right? So okay, so the best entry bar is the bar on the opening of the green pentagon. So how to position for market reversal for the upside in here? Definitely, if you look into the rubber glove, likely to be distribution, okay? Unless it break higher, then it will be a continuation of the trend, which is part of the stage 2 in here, right? The reversal was at the bottom, just like the reversal I talked about for the technology stock last week. Yeah, remember I said that, it's red pentagon opening out a nice base, and that's how I want to identify and show you example how to do that. So one of the ways that some other sectors has not turned, right? So for stocks that is like technology and as well as rubber glove, if you are trading or about to enter when the market breaks up, it is likely to be a continuation of a stage 2 share, which means US is turning much bullish than it is, and our market is turning much bullish, which is something I just talked about early on in the slide. But likely the market will pull back, and we want to see how much of the pullback before it go. But at the start of it, the beginning of the story, which we look at it on the live Facebook, was the market bottom. You want to pay attention to the high price volume in here, especially on the left hand side of the stock. So you can see just on my left side here, this is the ultra high volume, and the market breaks down. So a lot of stocks exhibit the same thing too. And then you want to look at the relationship, look at the sign of strength, sign of weakness in here. You can see even when you go back and watch this video, we have a lot of spring, a lot of tests, then the market's going to go up. Now those are the things that you're looking for. And then confirmation, look at the news. Usually, depending on the type of influencer they are telling you, as what I said before, the news is important. Being a contrarian trader or investor does help a lot too, right? So if you're looking at something that is very negative and very bad news, everyone is asking you to sell, but you do have that green pentagon, you just need to be ready, and that's where you want to be, riding up the market reversal from here, right? So right now, if you're looking at Top Glove, I know some of you who is looking to buy Top Glove and so forth. My point is, no, it's time to sell your Top Glove if you are trading. Longer term, I don't know. It's time to sell your rubber glove. If you have bought some early on, right? Maybe at the green pentagon, you have in the money about 18%. Take some partial profit, the rest you can run it in here. The last rally that we have was October 2022. There was again only 17 bars, up bars, okay, 17 up bars. So right now we are at 13 bars, so another 4 or 5 more bar. And usually if you have 2 line change after the upthrust, right? Let's say tonight Dow Jones closes very well, and then you have the the line chain 2 or 3 bars on climatic volume, right? Maybe that's time you want to take some profit, because market usually go through that. You also have right now a double top. You got an upthrust here, and you have another upthrust, and that's usually what we do see in the market likely to turn down. But That's what is likely to happen, but it's not confirmed yet, right? I was going to play a trading simulation game right now, but due to the time that we have, I'll probably do this on Wednesday for our members. So make sure you join our Trade VSA premium membership. Members has this privilege, and for all our members, I will be doing this trading simulation with you on that Tuesday night. All right, Tuesday night, because Wednesday we do the public one, and then Tuesday we will do the members session in here. Okay. So my point is that there's a lot of information out there. We are coming to the end of it. I really appreciate your time. If you have any question, pencil those in there. I'm happy to answer in here. It's a lot of information out there. It's the filter, right? It's the filter that we have in our brain. Many times is that we don't fine tune it, or it's just that, we don't read enough, we don't watch enough, and we tend to stray off to the shorter term rather than the longer term. And I do hope that tonight, my very short 40 or 45 minute, give you some insight, some of the things you can do as a rational trader, investor, and some strategy I'll talk about in here. Start to adopt it into your day-to-day work. Going forward in here, very important, the financial education can turn that mirror into a window of opportunity that we see in ourselves in here. So 5 things you do as a rational trader in here. So keep in mind, the most important one these days through social media, and even I'm an influencer, consider myself as a financial stock market influencer, you still need to question it, question everything. Just don't take everything as it is, because this is where I talk about the filter in our brain or in our mind fail. We just take never question, especially we Malaysian never question. And the others I've talked about it in here, right? So one thing you will learn tonight is, question everything. And if we do question everything in here, just like our smart Robie, we do a lot of fact crunching. We do all the necessary filtering before we get some of those great idea stocks there. So do share those smart Robie apps and all. And then we come down to the end of it. The summary is there's some undervalued shares, beaten stocks in here. The 2 opportunities that I talked about earlier on, those are likely to move up if and only there's a continuation effect. If you're looking for those more beaten down, perhaps you might want to use a screener or use the smart Robie apps. Look into individual sectors, the beaten down sectors in here. There's another way to look at it, and try to understand how VSA timing work. And that's why we like to invite you to our Trade VSA premium membership, which I've been promoting time and time again in our live Facebook, especially some of you are members in here, where we do our monthly orientation, is to get you up into speed, right? And also finally, always think about being the contrarian if you're not, because it is less crowded out there. Being so-called, the usual things that people buy is usually very crowded, and everybody is out there rushing here. So that's all I have for tonight, and thank you for coming. If you have any question, feel free to pencil in there. I try to finish everything within 50 minutes, 55 minutes in here. And this is our Telegram chat room here for all our information. And do share that with your friend in here. And good night. If you have any question, send in to our Telegram chat room in there. That's a comment. You can comment, or you can always give us a dial. That's a WhatsApp number in here. You can get in touch with us. I thank you for your time and your support tonight, and for your generosity of your time spent in here. And I do hope you have learned something tonight in here. And do give us a feedback how we can make the live Facebook more entertaining and more enjoyable for you in here. Also check me out on trade_VSA on TikTok, because I have started to do some TikTok video, very short one. I was told to do less than a minute, so those will be my format in here. Check me out and follow me on trade_VSA on TikTok. With that, I bid you good night. Bye bye.